Raising kids can be expensive, but the U.S. tax system offers help through the Child Tax Credit, CTC. This credit reduces the amount of taxes you owe, which means more money stays in your pocket. Whether you're a single parent, married couple, or guardian, the Child Tax Credit can make a big difference during tax season. In 2025, the rules are slightly updated, so it's important to understand how much you can get, who qualifies, and how to claim it. This video explains everything in simple words, so parents across America can take full advantage of this valuable benefit. In this video, we will talk about Child Tax Credit explained for U.S. parents. So before we get started, make sure to hit the like button and also subscribe to our channel. 1. What is the Child Tax Credit? The Child Tax Credit is a benefit given to parents or guardians to help with the costs of raising children. It directly reduces the amount of tax you owe. It's not a deduction, but a dollar-for-dollar credit. If your tax bill is $3,000 and your child tax credit is $2,000, your new bill becomes just $1,000. That's why it's so powerful. It puts real money back in your hands. The credit is usually given for each qualifying child under the age of 17. It's a great way to ease the burden of raising a family in the U.S. 2. How much is the child tax credit in 2025? As of 2025, the maximum child tax credit is $2,000 per qualifying child under 17. Of this amount, up to $1,600 may be refundable, meaning you can get money back even if you owe no taxes. The refundable part is called the Additional Child Tax Credit, ACTC. If your credit is bigger than your tax bill, you may get a check for the extra amount, up to $1,600 per child. Keep in mind, this amount may change depending on your income. Higher earners may get less, while lower to middle-income families usually receive the full amount. 3. Who qualifies for the credit? To qualify for the child tax credit, the child must meet certain rules. They must be under 17 years old, be your biological child, stepchild, foster child, sibling, or a descendant, like a grandchild. The child must have lived with you for more than half the year, must have a valid Social Security number, and must not provide over half of their own support. Parents or guardians must also meet income rules. If your income is too high, your credit may be reduced or even eliminated. We'll explain those income limits next. 4. What are the income limits? The child tax credit begins to phase out if your modified adjusted gross income, MAGI, is above certain levels. In 2025, the phase-out starts at $200,000 for single filers, $400,000 for married couples filing jointly. For every $1,000 over the limit, your credit goes down by $50. So if you make $10,000 over the limit, your credit drops by $500. Many middle-class families still qualify for the full amount. But if you're near the limit, consider contributing more to retirement or other deductions to lower your income. 5. What is the Additional Child Tax Credit, ACTC? If you don't owe much tax, or none at all, you might think the child tax credit won't help you. But that's where the Additional Child Tax Credit, ACTC, comes in. The ACTC lets you get a refund of up to $1,600 per child, even if you paid no income tax. To qualify, you usually need to have earned at least $2,500 during the year. This is especially helpful for lower-income families. Even if your income is small, you can still get part of the credit as a cash payment through your tax refund. 6. How to claim the credit. You claim the child tax credit when you file your federal tax return, Form 1040. You'll need to include each qualifying child's Social Security number and fill out Schedule 8812. Tax software like TurboTax, H&R Block, or Free Tax USA can help fill it out automatically. You'll be asked about your child's age, relationship to you, and other basic questions. Make sure your child's information is accurate and matches IRS records. Small mistakes, like a wrong birth date or name spelling, can delay your refund or cause the credit to be denied. 7. What if you share custody? Only one parent can claim a child for the child tax credit each year, even if both parents share custody. Usually, it's the parent the child lives with for more than half the year. Sometimes, divorced or separated parents alternate years. In this case, the parent claiming the credit must get a signed Form 8332 from the other parent giving permission. The IRS uses strict rules, so make sure to agree ahead of time. If both parents try to claim the same child, the IRS will reject both returns and investigate. 8. Can you still get the credit if your child is 17 or older? The main child tax credit applies only to children under age 17. But don't worry, there's a separate credit for older kids and other dependents called the Credit for Other Dependents. This credit gives you up to $500 per dependent who doesn't qualify for the regular child credit. That includes children 17 or older, college students, elderly parents, or disabled relatives you support. While it's not as large, it's still a helpful way to lower your tax bill. You'll claim it on the same return when filing your taxes. 9. Can the credit be denied or delayed? Yes, the IRS may delay or reject your child tax credit if your return has errors, missing information, or inconsistencies. Double-check your Social Security numbers and spelling. Also, the IRS may hold refunds that include the ACTC until mid-February to prevent fraud. So if you file early, expect a slight delay in receiving your refund. If the IRS denies your claim, you may need to send extra documents like birth certificates, school records, or custody papers. Always respond quickly and keep copies of your paperwork. 10. What changes could happen in the future? The child tax credit rules have changed many times. In 2021, it was expanded under the American Rescue Plan, but those changes have mostly ended. However, new laws may expand or adjust the credit again. Some lawmakers are pushing to increase the refundable amount, raise income limits, or bring back monthly payments. If passed, these changes could help millions of families even more. It's a good idea to stay informed each year and file your taxes on time. That way, you'll always get the most help that the tax law allows for your children and family. The child tax credit is one of the best ways for U.S. parents to get extra financial help during tax season. It can reduce how much tax you owe or even give you money back, up to $2,000 per child, with $1,600 of that possibly refundable. That means more money for your family's everyday needs, like food, clothes, school supplies, or savings. Even if you don't owe any taxes, you can still get part of the credit through the additional child tax credit. The rules are easy to follow once you know who qualifies, how much you can claim, and how to file correctly. Parents who share custody or have older dependents may still qualify for different types of credits. Always check for updates each year, keep good records, and file on time. With the right knowledge, you won't miss out on the benefits. The child tax credit was made to support families like yours. Use it fully. What do you think of our video? Let me know in the comment section below. If you enjoyed this video, make sure to hit that like button. Also, subscribe to our channel before you go. Thank you for watching.